right, so, stock market corrections come and go. I think you got a correction today, a little more than 1.5%. Buy it. It's a good place to buy for long-term investors. Anyhow, we got John Carney, financial journalist. We got Taylor Riggs, co-host of The Big Money Show. And we got Dagan McDowell, also co-host of The Big Money Show and co-host of The Bottom Line right here on Fabulous Fox Business. Thank you. John, you've been writing about the Fed. They're leaning suddenly, or it looks like they're leaning against cutting rates. This could be a big mistake. They've been saying this for the last week or so, and it's affecting the stock market.
Yeah, I think that's what brought down the stock market today. A month ago, the market was pricing at 90% chance of a cut in December. Now it's down to 50. It's going to go under. The market is basically pricing out a December cut because you have all of these Fed presidents, really, who have been the most vocal.
God, I just hate this. I just hate this. I hate
don't want to cut.
I can't wait for Trump to have an opportunity to replace them. I mean, this guy Bostic's going, he's not even the worst from Atlanta, but I just can't stand that. They all have to chime in, nana. It's like, it's too much. Stop talking. But your basic point is the Fed should cut rates, and if they don't, it's going to damage the market.
Well, people have said, well, maybe they could do some sort of dovish hold. That's not going to work. The market is going to see, if they do not cut in December, that they are going on pause for a long time, maybe for the rest of Jerome Powell's tenure, so not till mid-year next year do they start cutting again.
Whoa. Go ahead, Dagan. You got to do it.
So quantitative tightening's ending December the 1st. People were already, investors, planning on, betting on quantitative easing, so expanding the balance sheet, because investors in this market, parts of it, are just drunk on monetary stimulus and less so fiscal stimulus, because President Trump is in the White House and you've got Scott Bessent who's trying to right-size what they're doing in terms of the deficit. But just looking at inflation, it's not what's coming out of the mouths of these Fed heads. It's that the annualized month-over-month growth rate of, if you look at all the items in the Consumer Price Index basket, more than half of them, 55%, are growing faster than 3%. So this was earlier this week. People were talking about it's going to be very tough.
You believe that stuff?
Yes.
You really do?
Yes.
The BLS, you believe that?
Well, what else are you going to believe?
A couple of weeks ago, we were all trashing the BLS.
I will say this.
On a bipartisan basis.
President Trump.
Now we love them.
President Trump is not double-digit points underwater on inflation if people didn't feel something real.
Or there's a hangover from the Biden days. But I do think, look, one very positive thing on inflation, energy prices come down, gasoline prices coming down. 28 states below $3 a gallon. Actually, it's $2.80. And you got more of that coming. That's going to really bring the index down. However, I think that there's somehow more to this. I mean, I don't know what this could be. Beginning of correction. You're probably overdue for a correction.
Yes.
You've had a 35-some-odd% increase in the S&P since mid-April. So you probably, I don't know, you're the market guru.
So
what do you think?
Let's talk about this. First of all, today's Thursday. The Dow and the S&P 500 are still positive for the week. Yes, the NASDAQ has wiped out its gains for the week, but we're not we're a couple percent from record high. And yes, I strongly believe that small pullbacks are healthy for this market. You do not, and we had Gary Kaltbaum on our program earlier, you do not want pre-earnings, let alone pre-revenue companies going parabolic. That is not healthy. You want to pull back in some of the technology stocks, which we are absolutely seeing, because you want a broader based market. You don't want 40% of the S&P 500 to be the Mag 7. That isn't broad based. Here's the good news for technology, though. Technology stocks are theoretically long duration assets. When I discount those long duration cash flows at a lower interest rate, if we get lower interest rates, the value of my present cash flow today, the value of that stock is worth more. You follow the math? So lower interest rates help technology stocks.
Well, that's why the market needs lower interest rates. And when the Fed is not going to cut to 2.5% anytime soon, the valuations don't make quite as much sense in these nosebleed levels.
I mean, the profits are very good. So the question, profits are great.
16% year over year.
But the question is the discount rate, which will capitalize into future earnings or the future value of the stock. So I agree with that. But you know, John, I was almost going to agree with Dagan until that last sentence or two in the first go around. I don't think the Fed should let the balance sheet grow. I think the Fed should shrink the balance sheet, because that means the monetary base and the money supply will be held down. And Milton Friedman has a point, even though no one listens to him anymore. Less money supply. Now, I'm not talking about income in people's pockets. That's different.
Right.
I mean phony money, the printing presses. I want fewer, lower printing presses.
I'm agreeing with you.
I know I said I was actually about to agree with Dagan.
So I agree with Dagan in that I think they're doing it wrong. I think they should be cutting rates and continuing to shrink the balance sheet.
Yes, that's it.
They're actually going exactly the opposite direction I think they should be doing. And
this is what Kevin Warsh wrote in the Journal a couple of weeks ago, whenever it was his interview. It's exactly right. The lower balance sheet. Think of it, for people out there, I know it's in the weeds. Just think of less printing press money.
Right.
Okay, I'm an economics profession, but that will open the door for lower interest rates and less inflation.
I
think
the Fed is too scared of inflation. As I wrote in my piece, right now, when you see what the lower income Americans are spending, it's not growing very rapidly. Mm-hmm. So that means it will be very hard for companies to try to raise prices. I do think we may see a little bit of an inflation scare in the December numbers when those come out, because companies may try not to discount as much, and the way the CPI is calculated in December assumes massive holiday discounts.
But goods prices,
they're not up at all.
It's a big zero.
Right, they've been up a little bit if you annualize the last 3 months, sure, it looks like a lot of inflation, but that's catch up, because goods prices are barely up at all, 1.5% for core goods.
If this shutdown, this Democrat-led Schumer expletive down tells us anything, is that if you want to talk about inflation, talk about healthcare inflation that's driven by government subsidy and spending. And that's something that nobody has a solution to.
I tell you, though, I don't believe that this is not about healthcare spending.
Oh, no, it wasn't. I agree with that, but I'm saying that
it destroy Donald Trump and his presidency and his successful economy.
And that's why they were right to hold the line, Larry, because if they weren't, no matter what Trump did on the healthcare stuff, they would keep shutting down the government, and they'll do it again in January.
That's right. I mean, I'll read the Barton Swain thing in the Journal, just to have some fun. This has nothing to do with the stock market. But he's saying these are the people behind the shutdown, the people putting pressure on Chuck Schumer, not necessarily other Democrats, okay? It's the American Civil Liberties Union, the Sunrise Movement, Planned Parenthood, an array of immigrant rights organizations. Some of them are so radical as to be almost insurrectionists. The American Federation of Teachers, the National Education, the unions themselves, the good unions, wanted to end the shutdown. These are the left-wing unions. Okay, now it gets worse. The Southern Poverty Law Center, far left group, Black Lives Matter and other racial justice organizations, human rights and assorted LGBTQ activist groups, scores of foreign-connected Palestinian rights and otherwise anti-Zionist organizations, the George Soros-funded network known as the Open Society Foundation, and on and on. These were the people, these were the people behind the shutdown. Now, you do it again, you're really going to damage the economy. I mean, that's just going to be Fed or not Fed. If you keep doing this, January 30th is the next go-around.
Well, and you know this better than I do. You're damaging the economy now, but you're pushing those numbers out, and Scott Besson said this, to Q1, Q2. So you're just sort of penting up the demand for next quarter.
But if you keep closing it down,
you also shake people's confidence in the idea that we can run our society competently.
That's right.
And that will really hurt the stock market. That will hurt businesses.
They're just trying to sabotage Trump. That's the long and the short.
And the pain was the point. They actually didn't care about people's safety and security, the American people, those Democrats. They didn't care if anybody got hurt or missed food assistance.
Plane crash or taking food out of babies' mouths. No, you're right about that. John Carney, Taylor Riggs, Dagan McDowell. Don't miss Taylor and Dagan, along with their co-hosts Brian Brenberg and Jackie DeAngelis, and occasionally Larry Kudlow, on The Big Money Show, weekdays from noon to 2 p.m. Eastern. And you can also catch Dagan hosting The Bottom Line weeknights at 6 p.m. Eastern, right here on Fabulous Fox Business. I hope we got it all in.